Hi stock investors, JJ here. Welcome back. Well, I'm going to react to this video right now with Morgan Stanley's Wilson, who says that a 10% market correction is highly likely. And I've just made a video reacting to a clip where an analyst, Ed Yardeni, said that he thinks the market is in a slow motion melt up here in the second half of 2024. So let's see what this guy Wilson has to say from Morgan Stanley. What's his justification for there being a correction soon? He doesn't. I'm not sure if he says when. Let's find out. I haven't seen the clip yet.
How much can these companies start to deliver here? How much of an issue are they going to have if they don't?
Well, I think this is one area where, once again, bad is bad. Okay, so I would argue that, weaker economic data is potentially good for multiples generally, at least if you're delivering on the earnings. But if you have bad earnings reports, you're going to get punished. And that's been consistent all year, which is why the average stock is down this year. The average company has not had good earnings results.
That's a good point to make, Mike, by the way, because we talk about, Jess Menton from our equities team writes about this earnings expansion that we're in, 3 quarters in a row of growth, but it's only 7, 8, maybe 10 companies. The other 490 in the S&P are not doing well.
So Mag's talking about the Mag 7 stocks there, starting with NVIDIA at the top, having absolute blowout earnings quarter after quarter with, AI coming in there. We're selling so many GPUs to these other big companies. So these companies have had some good earnings, but yeah, a lot of the market not so much. So is the correction going to be just in that top heavy end or not? What does he think?
Well, so what has to happen for them to grow, to increase their earnings, to do well?
Yeah, well, first of all, it's more than 7 companies, but it's not more than probably 30 or 40. So it's narrow. It's like a nifty 50 almost is what I would characterize it now.
Nifty 50, if you're not familiar with that, he's referring to the nifty 50 bubble there way back when the top 50 companies, this included McDonald's and Coca-Cola and Kodak back then, where market valuations, multiples got stretched there, and these companies could do no wrong, and it actually was a bubble. So he's referring to that.
What needs to happen? Once again, we need the Fed to cut meaningfully. We need the curve to re-steepen. We need cost of capital to come down. We need the labor markets to loosen up in a way where these smaller businesses can actually hire people at a reasonable price. They need pricing power to come back. One thing that gets overlooked is companies are losing pricing power now. So while we're all rooting for lower inflation, once again, weaker inflation is not great for earnings. Small cap businesses, small cap companies like Russell 2000 typically only does well coming out of a recession, coming out of a new cycle. Why? Because rates are low, curve is fully steepened.
And the Russell 2000 has been underperforming while the S&P 500 and the Nasdaq have been doing very well. Still underperforming. People are kind of waiting. Some of these people on these shows, like Tom Lee from Fundstrat, he's predicting that the small cap Russell 2000 will have, I think he said 50% upside before the end of the year, which isn't really happening so far.
Access to capital is abundant, and they have operating leverage again. That's just not where we are. So we need rates to come down as number one, or we need some sort of exogenous positive shock on the growth side that doesn't lead to an inflationary problem. So you tell me where that's coming from. I think it's going to be it's a challenge, and that's why we're not going to fight this trend. I mean, the momentum is so strong because it's right. Now, what worries me is that momentum is so strong, and people have a lot more exposure to high multiple stocks than they think they do. And if you have an event that's unpredictable, then you could have a real reset on valuation of 10, 15%. Like, I think the chance of a 10% correction is highly likely sometime between now and the election. Not just because of the election, but because uncertainty is going to prevail for a lot of different reasons. Earnings reasons, election outcome reasons, some of the things you mentioned earlier around tariffs, potentially immigration, Fed policy still remains uncertain. So yeah, I think the third quarter typically is that period, and it's going to be choppy. Now, we're hoping that's going to create some opportunity, but like right here, valuations to me look very, very unexciting.
Okay. You're saying unexciting valuations looking unexciting, meaning that there's no bargains out there. And what was interesting there, did you catch that, where he's saying that the momentum, the strong momentum that's seen in the market isn't necessarily wrong? He says it doesn't think it's wrong. And Howard Marks also said this in another video I did on the main channel, The Art of Value, where he was saying that the consensus in the market is usually right. The market usually gets it right. And we've seen a lot of analysts who are really positive on the market, whereas stocks like NVIDIA are over 90% still have a buy rating on that stock. And so Marx was saying that the consensus is usually right. So being contrarian, you have to pick your time to be contrarian, he thinks, which is very rarely. Most of the time the market kind of gets it right. And this guy's saying from Morgan Stanley that the consensus, the momentum's right, but there still will be in the third quarter, he thinks, there might be a pullback of 10%, which really isn't that much, but people will freak out and think that there's a crash coming. We don't know. You can't predict the market, but it's just what he thinks based on where valuations are at. And momentum does eventually turn at some point. That just happens. Has to be said. Well, I'd like to say that this is not investment advice in any way. I'm not giving any recommendations one way or the other about what's going to happen. This is just for entertainment and general education purposes, and you need to seek your own financial advice, of course. But let me know what you think in the comments, what this guy said. Do you think there might be a correction in the third quarter? It's, as I said, impossible to predict these things, but it's fun to sometimes to see what's going to happen. The market's been very strong this year or over the past year, really. So what do you think? Let me know in the comments. And on screen now, I'm going to put a link to what YouTube thinks that you should watch next, a video that the YouTube algorithm thinks that you should watch next. Usually gets it pretty right, I've found. Might be one of mine, it might not be. And so I'll put a subscribe link on the screen too if you want to follow along. This is a relatively new channel. And so in notifications if you want to see what's coming up. I'm doing videos daily here reacting to this news, commenting on it. So follow along if you want to. And thanks to everybody for watching, and I'll see you in the next one.